right, let's jump into it. Where we at? 6:30, 6:31 actually on Sunday, the 5th of October. So look, I'll sort of finish off with going over a little bit of the data that we had to end the week out. But of course, because we've still got this sort of lockdown, shutdown thing from the US, it's really sort of well, apart from the fact that we're missing half the important data, it was first Friday of the month, so we should have had NFP out, of course, but of course those numbers weren't out. The weekly unemployment claims, they weren't out. So basically, obviously, anything that is from the government, so non-private, is going to be missing for the foreseeable future. So we still get things, as you said, we got ISM, which is obviously sort of, as you can see, it's like a survey of 300 purchasing managers, asked respondents. So, you know what I mean? It's more sort of private sort of data, like same with the ADP that came out, which obviously came out very weak this week as well. So, it was a bit hard to fully get a gauge of what was happening. And, the market actually kind of, it's funny, it kind of respected that a little bit, like in the sense that it was for the most part sideways. But we did see a slow sort of drift off in US dollar, slow drift up in gold prices. Silver actually was one that was a bit of a standout into the Friday session there. After, of course, we had the big sort of metal sell-off twice throughout this week, I'll sort of point out. But silver actually Friday night took out 48 and $48, and I think 48.40, 48.50, somewhere around this, which of course is new high for this sort of period, and coming right into those high time frame resistance zones. So get that to the moment. But back on the data, we had ISM sort of coming out. We had a few Fed speakers and that. ISM a little bit weaker from what the market was expecting, a little bit slow down from last month. So a little bit more on that sort of weaker US dollar side of it all. But as you can see, a few speakers. This Mirren guy obviously sort of keeps sort of harping on. It's funny because Mirren was sort of like the one that was appointed by Trump, and obviously Trump's very clear and adamant that he wants a sort of weaker US dollar, and he wants rates down basically, and well, rates down that'll give the weaker US dollar, and I think that's an important sort of point to make. Differentiate, whatever the word between the point, sorry, between a weaker dollar and then a weak dollar. So we've already seen the dollar come off, say, 10% or so for the year, which is a massive for, US dollar particularly. I mean, for any currency, 10% is a big move, but, US dollar, the world reserve, yada, yada, all this sort of thing, coming down 10%, it's definitely become more weak. The question is it going to go down a little bit further? And we've seen a couple little sort of flare-ups, which obviously I'll get to in the charts in a moment, but, every time it does sort of move up, it just keeps sort of selling back down. But on a larger time frame, we are still kind of holding this sideways at the moment. We had the rate decision, which was the big one that everyone was looking for. And it's like, okay, well, rate decision, is that going to be the thing to push it over the edge or push it back into life? And it was kind of really like a nothingness. It's kind of like, a little bit of a flare either way, but hasn't really broken those zones. So not quite sure what we're really sort of waiting on at the moment. Obviously, to get this sort of government shutdown, that'll be a big sort of thing to sort of see what they're going to do moving forward. And I think really with that, that'll give us the jobs numbers. So if we can get the jobs numbers, we'll have a clearer picture about what the Fed is probably going to do. Because, of course, we've seen CPI, inflation's been a little bit stickier, a little bit higher. I mean, there's a reaction for a higher inflation is obviously one of sort of holding the rates. But I mean, if you look at these, I've got this one over here, the sort of Fed watch thing. Again, this is all just for whatever it's worth. The market is very much pricing the idea of a 25 base point cut. A little way off now, so it's not like this is happening tomorrow, but it's just how the market is particularly sort of kind of looking for it at the moment. But once we get that sort of jobs data in, then we'll sort of know, okay, look, is it continually weakening? I mean, we got ADP this week. They're very weak with the numbers. But NFP was the one that we really wanted to see. And obviously the unemployment claims, the unemployment percentage level, these are the kind of bits of data that we need to plug in so the market can probably have a little bit of a surety. I mean, nothing's ever positive, but you can see a little bit more which direction they think they're going to go moving forward. Because if jobs turn out to be not as bad as they kind of originally had been sort of touting, then that puts the focus back on inflation. And if their focus is back on inflation, well, the idea of them cutting isn't off the table, but it's got to be pushed back a little bit. And if that's pushed back a bit, that's when we're going to see US dollar run up there a little bit more as well. And this is just on the data. This isn't even sort of talking about any of the sort of geopolitical sort of things sort of moving forward as well. So yeah, as I said, nothing sort of super to sort of report on the end of the data there. But if we have a quick sort of squeeze on what we have coming up for this week, sort of see. So we got bank holiday in Australia for the Monday. I think there's only a couple of the states in that. I think it's in more Sydney, this kind of stuff. I'm quite sure in Melbourne, I don't think we actually have a public holiday tomorrow. But again, look, I don't think that's really going to affect things too much with it all. We've got inflation gauge. Okay, this could be something to look at for the Aussie. We'll obviously get to the charts with Aussie in a moment. But typical sort of Monday, pretty cruisy on the news front. Coming into the Tuesday, we've got Lagarde speaking, Bailey speaking. Again, this is really going to impact things. Probably, maybe more Lagarde talking would impact things maybe a little bit more, just for the sort of proxy flow on with how much that can obviously affect the DXY. But apart from that, it's not going to be anything I'm going to be sort of majorly tuning in for. Got consumer sentiment for the Aussie on the Tuesday there. Again, it's not a massive sort of one. How have we been trending with this? Look, very choppy back. We go from sort of +5 to -3. This thing is just chopping all over the place. Like, but I mean, like, I would say sort of if, although you're getting these big spikes of like sort of these sort of things of euphoria and okay, high confidence, and then the next month as equal low to the other side, one, either the data's just a bit flawed, and you take it with a grain of salt, or two, it's kind of like sort of it's this level of uncertainty. You know what I mean? It's either bad or it's good kind of thing. I mean, if it's good, you'd sort of start to see, even if it's small, but it'd still be in that positive area. The fact that it's flipping back and forth doesn't, I don't know, it doesn't fill me with confidence for this sort of consumer sentiment kind of data. Again, it's not anything that's going to really sort of pump the market. It's just a piece of the puzzle you can kind of plug in there. Job advertisements, I mean, again, it's not really a bit of data that's going to massively move the market. We can sort of see how it's looked previously. And again, same similar thing, probably on the higher side. If it comes in anything sort of positive, maybe a little bit something stronger for the Aussie, but really it's just tail end of what's happening with the US dollar at the moment. Moving forward, not really anything. So pretty quiet sort of start to week. Just actually was ticked by sort of JPY. We've got also the elections happening over in Japan at the moment. I'm not quite sure what the outcome was with this, but I do believe it was the lady, which was the first female prime minister that they had elected, and I think she's a little bit more on the conservative side, plus also a little bit more hawkish. Again, it's not directed unless you're trading yen, be sort of like super impactful for it all, but it's important to sort of understand and sort of be aware at least of what kind of sort of lead these people are having, because yen, okay, yeah, as a whole, it is quite weak, but it does still serve quite a big, large purpose within the sort of broader market. And if obviously they're sort of a little bit more on the hawkish side, which I think is the opponent that she was running against was one that was actually a little bit more dovish with it all. Um, so, how these things can sort of affect then the flow on of the US dollar as well. That's the smaller kind of sort of interesting sort of bit with it all. But again, it's not really anything that's going to be sort of massively impacting stuff. It's just something to be aware of. Ticking forward, again, not a great deal, not a great deal. It's actually looking like a fairly quiet week. We had a massive week with data last week, so I think a little bit of a sort of cool off on it all might sort of give us this chance to sort of fall back on the technicals a little bit. But of course, again, like, just got to keep in the back of the mind that, we still do have this lockdown going on. We've also got the big sort of Middle East sort of situation, which could be on the precipice of actually having some sort of resolution. Though I kind of feel with this, it's almost the same with the Ukraine situation. We've been here 1,000 times before, and it all sounds great, and then nothing happens. So, believe it when it happens, but Trump went pretty hard with it all in the sense of giving him a pretty deadline ultimatum, sort of saying that, okay, look, by 6 o'clock Sunday, that's their time, which equates to 8 o'clock Monday morning Melbourne time, that they want an answer, a response. And Hamas came back very quickly. They weren't sort of like, oh, no. So I think, I mean, it's one thing to sort of like battle Israel, and they've got their multi-thousand year war or whatever is going on with the guys. But I think even Hamas would have to realize that, that's probably a bridge too far. And if the US is going to get involved, you know what I mean, they would have seen what happened to Iran. That lasted all of 3 days. Like, what I mean, they bombed an underground bunker with precision in the middle of the night within 2 or 3 days, which is supposedly sort of like hidden. You know what I mean? Like these guys have already sort of been bashed and smashed for what the last 2 years by Israel. On top of that, then they're going to try and take on the US. Yeah, I don't think so. I think these guys are even that they're not that suicidal with it all. So anyway, they got back to it pretty quickly. But again, there's all these sort of things with these things. It's sort of like, okay, there's going to be a resolution. Yep, okay, you got to hand us. But it's all this but kind of stuff. And sometimes in the past, at least, we've sort of seen that it's been so many of these sort of little sort of asterisks underneath it, all these sort of conditions that need to be met, that it's almost sort of like an impossible feat to get that stuff to be met. But for now, it seems not too bad. Both released their hostages, yada yada. It's like um, unrestricted aid going into there. But I think they are asking Hamas to sort of like hand up all their guns and all this kind of stuff. And I think that's something that may become a little bit of a sticking point. But again, look, all we can do is wait to sort of see what happens with that. But it's just yet another cog in the whole sort of thing that you need to sort of like be aware of. It's not just the economic data. We may have a quiet economic data week going on, but I think that's definitely something that could be impacting the market come Monday morning, particularly if we don't get an ultimatum. I think if they do, bang, we'll see gold probably drop off a little bit. We'll probably see some safe haven reduction. Flip side is if they don't, and Trump's not playing around, and that escalates further, well, that could be a green light for gold to be pushing through to towards 4,000. So it's just something to keep on the back burner there as well. Anyway, back to the data. So through Monday, Tuesday, not too much in there. We've got cash rate over in New Zealand. So they are actually cruising this down, because if you look at sort of where they were, I've just lost it now. 2 seconds. Yeah. So looking for a 25 base point cut. If you look at how high, they went almost as high as everybody, 5.5%, and they've just been cutting very aggressively. So they're coming down to 3% now, looking to go down another 25 base point. That's a very aggressive sort of cutting. So look, they went up harder. Certainly if you look at as high as Australia, I think we went to 4.35. But they went higher. Okay, now they're coming off a little quicker, and New Zealand dollar has been very weak, as you would expect, for this kind of sort of reaction with it all. So we'll sort of see. I'm not quite sure how much longer or they're aiming to sort of go, but I guess the data will give them a bit more of a clear idea. But certainly New Zealand dollar anyway has been quite weak off the back of all that kind of stuff. You got UADA speaking a little bit after that. Again, nothing really sort of jumping at us here. We've got some Fed speakers on the sort of Wednesday night, Thursday morning. We've got Fed minutes coming out Thursday morning, 5 a.m. Fed minutes and that has the ability to sort of move things a little bit, but again, because we're getting these Fed speakers so constantly, it's just a. So I got distracted by this next part here. Because we're having these Fed speakers so constantly, none of it's like a really massive revelation. I mean, we have the conference afterwards where we hear from Powell himself. We have question time, and then on top of that, then we have Fed speakers, 15 times a week, sort of coming on. So we're pretty sort of clear on the sort of what their sort of outlook is moving forward. So look, it's one of those things that can get a little bit of a market reaction, but I don't think there's going to be anything that's like great shocker kind of sort of data sort of coming out. We hear from them too often. Through Thursday, then we got inflation expectations here, 4.7%. What do we have recently for this? So slightly ticking, no, up and down, up and down. So it seems to sort of be a bit of choppy through here. So 5 to 4.7, 4.7 to 3.9. So it's slightly moving up here a little bit as well. And of course, look, that probably goes in line because the last two CPI prints we've had with from the RBA have both been around 3%. So a little bit on the sort of the stickier side of things. The quarter on quarter is what we're really looking for the Aussie. Because that's really sort of what Bullock was saying a lot about the other day when she was doing the press conference, that the quarter on quarter is going to be what they're most likely. It's not going to be the definitive driver, but certainly that they're paying a bit more attention to the quarter on quarter opposed to the monthly. So, although that is changing soon as well, just as a little footnote with that, they're changing, and I think the RBA from November, possibly. I'll have to check that. No, November or maybe even next year, early next year, whatever. We're going to be getting a full monthly print along with like all these other countries and central banks. Apart from that, yeah, again, still pretty quiet, bit of China data, nothing massive here. Unemployment claims, of course, if this comes out, this is what I got distracted with 2 seconds ago. 233, so I guess this must be this week's one. So no doubt, maybe they'll give us a whole bunch all at once if we do get, if the government's stopped being shut down, whatever, and they come back, maybe we'll get last week's data and this week's data together. I mean, that would probably kind of make sense, but certainly for some reason they're expecting this to be ticking up here. So 233. It's on the sort of getting up around the cusp. I think you could probably sort of deal with something around 230, maybe 233, 235, but past 240, I think that's going to be shaking people a little bit because, of course, like I said at the start of this, the jobs is still very much in the spotlight as to is that going to be a factor in the next, in the sort of outlook towards the end of the year and say the first quarter of next year of how the Fed are going to act. We got Powell speaking at the same time as well, so that might give us a little bit of light. Bowman speaking 5 minutes later, apparently, crossing over there. Bowman's obviously one of the dissenters, so pushing more for a bit more of a sort of dovish approach from the Fed. And then sort of coming through the end of the week, we got Bullock speaking. Got nothing there. So very quiet actually sort of throughout the weeks. And then, okay, non-farm has supposedly been pushed back to this Friday. Well, I guess they still have to give the data at some stage, but it's not as if like, okay, we come back and here's the data that we've missed with everything. They seem to be just scheduling it again as it was. So non-farms second Friday this month of the month, if they are back, of course. And with that, I say if because it has been 35 days was the longest that they have been in lockdown, shutdown, and that previously. So look, this thing could carry on. Look, I really don't. It's above my pay grade to actually sort of comment on how long they're going to be shut down for. Really have no idea. I think most of the market has no idea. It's really just when they sort of come to some sort of resolution. So the sooner the better in terms of probably risk, I would say, across the market. The longer it hangs on, I think the more people are going, because there's going to be bills and that to pay. Like all these people are going to be back paid once they do come back as well. But it's just that level of uncertainty of what's going forward. And that's the kind of stuff that could, be a tick that could sort of add to, say, gold prices, weaker USD at the moment. And then finally, just finishing off, 1 a.m., Jesus, ridiculously late on Saturday morning, you got consumer sentiment, inflation expectations over in the US, slightly ticking down with consumer sentiment, and then inflation expectations are 4.7%. So inflation is looking to sort of, in this expectation, looking to move down. So that does give the kind of idea of a bit more of a dovish reaction from the Fed. If the inflation isn't an issue, jobs are still an issue, well, you put it together, how would the Fed respond? They'd more likely be in the idea in the camp of probably cutting a little bit sooner rather than later to avoid recession. And obviously that's going to keep the US dollar a little bit under pressure. All right, so for not much news, or not much data at least, that are coming out this week, seem to have rabbited on about 20 minutes or so there. So anyway, look, I'll have a look at the charts, see where we're at, see if we can pull out any ideas or trends with it all. Start off with DXY, because we got this nice break through, what was it, Thursday? Wednesday night, Thursday. Put it on a higher time frame so we can actually pay a bit of attention to it. Which is fine. Look, I mean, we had a couple little technical reasons for this thing to be coming back here. It's around the 78% of that drive up of this last drive through here. And I did say at the time when we're coming down around this area here, I'm like, we had a bit of a negative divergence coming off the 78%. We hadn't really had that drive up here yet. And if you look at the sort of the analysis that I did on Thursday, that's what I was saying. That sort of like, from a structural standpoint, even if this is to go lower, I would expect a flare up first. And this is why it's very important to understand sort of structure of these sort of pricings. I mean, look, anything can happen at any time, but I specifically referenced this setup here, in that this is the kind of thing that you see maybe with Aussie, where it'll dribble, dribble, dribble like this, and then just fall off the edge. DXY doesn't tend to do like that. It tends to be a bit more sort of like, if it is going to go lower, it's going to rally up first, take out some textbook stops, then it can move on its way back down over here. Now, kind of sort of like, as I said, quietened out into the end of the week. Wasn't really anything massive to drive it one way or the other. And for the most part, was actually pretty flat through the session, as you can see through here. I mean, that's Friday, where are we at here? So that was Asia, as it held up the bottom here. UK session came in here, and a little bit more or less sideways. A little bit of a flare up in the early hours of the morning, settled back down, but just wasn't really giving too much away. So at the moment, it technically in a back test of the breakout of this little channel that it was sort of respecting for there. Buyers did step in, but as you can see, as soon as they stepped in, it was very much held in place. So it's not really a great deal to take away with this. Let's just clear this up a little bit, got that out of here. All right, so if we sort of think to where to from here, so as I said, I think the whole Middle East situation, I think, will be quite impactful on gold, on US dollar. If we're going off what we've seen in the past, and by the past I mean the more recent past, with the whole Iran situation, any sort of progress and any sort of resolution with these kind of things is probably positive gold. Positive Aussie. Let me start that one again. Positive US dollar, weak gold, which would also be weak Aussie in that situation as well. So I think if they do sort of come to some resolution and they say, hey, look, you know what, we've sorted it out. No, we're not going to go in and blow you guys absolutely out of the water. I could see that being as a catalyst for a little bit of sort of US dollar buying based through that. And the flip side of that is if they sort of come out and they say, hey, look, we gave you a deadline. You haven't met the deadline. You're refusing to sort of move forward with us. We gave you a warning. We're going to go for it. And we see an escalation of this situation, then I could see that being a driving force to really get sort of US dollar back down here. And the sort of the fail-proof line for that is through this zone here. So 97.20, 97.52, make that a zone, would be where, even if we get a dribble down to here, is where you'd want to sort of see it hold. I think any sort of close underneath this zone here makes this, as I just said, a little bit of a flare up, take out the stops, and then now you can move back down. Because the way these things will work is when they're sort of moving down, they'll sort of come up and you'll have all these little textbook stops above these highs, above these highs, above these highs. Yeah. It comes hard and fast. It shoots right up, takes out the stops, and now those positions are cleared out and continue on with the show and sort of comes back down over here. So that's why it's very important. I think sort of 97.50, that would be pretty much the line. You don't want to necessarily be holding a lot of gold longs underneath gold. Jeez, it's like dyslexic or something. USD longs for the short term, should we break down under here. Now, we do have a bit of support, obviously, coming back, just a couple of points lower, 97.20 into the zone over here. The fact that you've got this sort of like flare up to take out the stops to then take it lower, I don't know if that's going to be enough to hold it. I mean, look, we'll see how it goes, see how the price reacts around that point. But I think certainly if that's the level you want to hold, if you fail to hold that zone there, and it is due to this whole sort of escalating sort of situation, I would imagine there's probably a catalyst that we're going to be coming back down maybe into mid 96s. Now, the inverse sort of side of that is obviously if we do get some sort of resolution, some sort of positive movement, we could see US dollar sort of pushing up along here. Top side of that, above 98.15, which is that spike high that we had from that little breakout on Thursday. With this little breakout on Thursday, I did point out as well that sort of like these little hard, fast moves, they're short, sharp, they're unrelenting, they move right up like this. There's no chance for anybody to get off on this, and there was no real catalyst. Nothing happened. There was no headline, no change in data. There was nothing that sort of could go, okay, well, this is why there's change in their positions. And I said to a mate at the time that it's sort of like, this kind of stuff makes me a little bit cautious and a little bit iffy because, why? Why all of a sudden is the market going to just start buying US dollar when it's been in this incredible downtrend? Yes, I said structurally it needs to move like this, but there still needs to be some sort of reason behind it. And it's either a catalyst, bit of data, or it's serving its purpose of hitting the stops. And that's what we're starting to see now as it starts to dribble back down there a little bit lower. So really, it's a bit of a broad range here, but I would say sort of like at least sort of, above 98.15, cool, we're back up, we're looking 98.50, below 97.50, I would say, 97.20 is your first point of call. But should that break as well, then I think, look, we're probably looking potentially at all-time low, not all-time lows, but yearly lows, we could say. If we put it onto a larger kind of time frame, this is what we could kind of look at here. You can see that more or less it's just consolidating. Again, so if we put onto this other chart here, I had a little bit of this sort of inverted head and shoulders. And I put this chart up, I don't know, a week ago, something like this. I'll say, okay, look, how would this sort of work? Well, here's the resistance coming back. So this is where your buyers would be. Came in, and of course, buyers are showing up where they need to be. They're holding that zone there above that sort of wick high. There's a slightly different number on the 97.30 on these ones here, but more or less, that's your high here. Whoops. Across that low there. They're your kind of ones that are going to give you just your direction. And as you can see on a larger time frame like this, basically inverted head and shoulders, you pretty much sort of filled that measured move coming up into this resistance area. That's fine. This is either a back test of that neckline. If it fails underneath this low here, as I said, you've got support here, so it could find some buying efforts coming in here, but most likely it's a fail to hold this larger area, and we'll dribble back down there a little bit further as well. So look, it's a bit of a tough one. I mean, it has been very sideways for a number of weeks now. We actually had a fairly decent week. It looked like, okay, it was time to go last week, but of course, opened up this week, and it's been basically just smashed ever since. So as I said, they're the two levels that I'm looking at. I think that'll give us some sort of direction moving forward sort of throughout the week. 97.50 and 98.15. All right, moving on, we've got gold, and gold just unstoppable still from its large breakout. Let's put this back on, something we can look at. So we did have two little sharp sell downs this week. Obviously, I was looking for a little bit of a pullback here in kind of vein. Though in saying that, I'm not saying it's dead yet, and this is again why I think this sort of Middle East situation could be vital for this. Gold obviously finished very much on its highs. I mean, it's what, $10 or something off all-time highs. So you can't say it's anything but bullish. But at the same time, you got resistance, resistance, resistance. And this had sort of three touches into it, this one here as well. So this is obviously sort of the area that they're trying to sort of take their profit from, trying to sell it down, but it's equally being met with the buyers sort of stepping right up through this as well. So I think sort of like, should you get up above 3,900, because it's all just shy of 3,900, that's fine. But we saw it sell down 95 down to 18. That's an $80 almost drop off. Of course, yes, then V-shaped buy it all, recovered straight back up there again. But these kind of sell downs, it's like something's happening around this point. It's been incredibly bullish. It could still pull back to these levels and still be bullish. It's just a matter of how fast and how hard do they want to push it. Are they just going to just jam it up through 3,900 and on we go, or are we going to see a little bit of the cool down to these levels here, which could eventually lead to a bit more of a sort of larger level of consolidation? Because if you look back in April, this is where we had that large run up when the tariffs were all happening. It went from this period here went from what, 29.60, geez, wow, sub 3,000, feels like a lifetime ago, sub 3,000 gold up to 3,500. That's fine, rocketing, 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 but it came back. And actually, if you look at where this move came from here, I think it's a 61%, or just shy, or just below it, sorry. So, these things obviously at some point will get a drop lower, but it doesn't mean the whole game's over. But as you can see, the endless push higher, higher, higher will end, like it will. It will pull back a little bit, second efforts, boom, boom, and it go into this level of consolidation. We could see something. Look, obviously, this is just call it for entertainment purposes. So this kind of effect, and this is obviously just sort of playing around with the idea. Oops, not that one. something to this kind of effect with it all. This is just, as I said, illustrative purposes. But the idea being basically that through this whole sort of area where we've sort of been rocketing higher, eventually it's going to come back and it'll bounce and it'll bounce and it'll bounce, and we could enter a level of sort of consolidation through a period like this. It will eventually happen. It's just a matter, is this going to happen at 3,900? Is it going to happen at 4,000, at 4,100? Well, that remains to be sort of seen with it all. But if you look at the things that are driving gold at the moment, and if I was to say that we had the sort of the top drivers of gold, I would say, well, Israel, as we know, is probably the main driver at the moment, at least this very second. Short of that, we got sort of like, weak USD, kind of like, sort of like weak USD, call it Fed moves, Fed rates, whatever. Fed rates. We got the Ukraine, Russia situation. That's obviously another sort of driver with it all. Fed independence. I would think that's definitely sort of dependence has a little bit of an effect on things. And on the note of Fed independence and that as well, we actually saw a headline come out through this week where the Supreme Court ruled that Trump isn't allowed to fire Cook, which is one of the Fed members, on the spot. And gold dropped $20 off that. $20 in the scheme of things is it's a blip. And this is what I'm saying. It's not like the driver of it all. But once you add all these things together, once you go, okay, we've got the Israel situation still going on. We've got a weak US dollar. We've still got Russia, Ukraine going. We've got potential Fed interference, Trump intervening with the Fed. All these things together, well, this is the kind of result that you get. And then on top of that, you've got maybe a bit of tariff fear. You've got maybe the sort of like the idea that you've got sort of like the troops running around into cities and that across the US. So there's a number of sort of factors in that. But once you sort of chip away at these things, if this Israel situation sort of calms down a little bit, then we could see part of the reason, not the entire of the reason, but part of the reason for gold to be where it is now in terms of price. Well, people go, hey, look, you know what? We've got 5 things pushing it forward. Of course, including the local sort of troop sort of situation here as well. But we've got these 5 factors. Now there's only 4 of them. Well, let's peel back a little bit because it's not as strong a case for gold to be at these levels. And if we see, as I said, the Fed independence, well, that kind of got a little bit of a resolution this week because, one, Trump's not sort of pushing to get rid of Powell at this point. The Supreme Court sort of ruled that he couldn't impact with Cook, interfere with sort of getting rid of Cook out of there. So there's something to pull back on it. Didn't really affect it overall because it's not the main driver. But should this Israel situation de-escalate, that could be a first start to see a little bit of a pulling back. And, as these things all chip off, that is what's going to lead to this sideways action. If not, a further correction down on gold. Like this is, again, just illustrative purposes. But that's kind of what we're going to see. So till then, it's just, as you can see, breakout and just running like crazy. Anyway, that's the sort of the broader sort of sense with it all. I think sort of the 2 levels that I'm going to be looking at sort of early, sort of into the week and that we don't really have a great deal of news or catalysts sort of moving things at the moment. Actually, just as I say that, on that list as well, obviously there's Fed shutdown, but that's not going to, or the US shutdown, but that's not going to be lasting. Well, I say that now, more than a couple of weeks at the most anyway. But so with less catalysts to really sort of drive these sort of things, above 3,900 is obviously probably your green light ticket, and okay, it's going to be going up. As to how high it moves on its first move, maybe 30, maybe 30, $40, and I can't really sort of say so much. You could say, okay, we'll look at the last time it's gone through the round numbers. So it went through 3,700, sort of teased it here, 3,700 sold right back down. Well, that's equivalent to probably the sell down we had when it got close to 3,900. As it went through 3,700, actually closed above, because here it didn't close above 3,700. It just spiked up there, closed above 3,700. Well, it ran up to 3,790. So we could see a big move up to the top side there. And we're just talking buck moves here, not percentage moves. Going through 3,800. 3,800 wasn't really too much of an issue for it, I don't think. Here's 3,800 here. 3,800 moved up 70 bucks, 3,870, and then we saw quite a sharp sort of sell down afterwards. So as to how high it sort of goes through there, it's kind of, there's not really a great deal. You could sort of say maybe the top of where this channel kind of would be, which would give you around that sort of 39.50, 39.60, depending when it happens and how far they try to push it. But that's a bit of a sort of a guessing game, just till it runs out of puff, pretty much for that one there. So above 3,900, you're probably looking on with the show. So I'll take this up over here. And then sort of like downside. Now, downside's a little bit more tricky, but I would say sort of underneath this, outside this channel, which we saw it bounce quite strongly off, almost to the cent on Friday, before that big sell down there, and then sort of came back up. I would say the downside would be getting down underneath these levels here. I don't think it will go down in one go. If it does, I think if we get a breakdown, we get something to this kind of effect, maybe a retest of the underside of this thing to sort of give it a bit of leeway as well. We come down and test these supports where we saw the buyers sort of come in the other day. That one, this one down over here. But I would say probably underneath that 38.20. Let's pull that just up a little bit there. Underneath 38, closing the 38.20s. I think that's where you could sort of confirm that it's coming down. And I say sort of confirm because look, there's definitely a big trade in this. It's a 60 buck move to come to this bottom side here. But till you get a close down underneath that 38.20 and confirm the horizontal breakdown as well, I could still see this thing just out of nowhere, just going like this and then rallying back up to the top like this. And we could potentially still have a larger just consolidation period moving here. So there's trades to be had in between these. Obviously, we got a little bit of support coming through here at 38.60s. But underneath 38.60, you're probably targeting 38.30. Underneath 38.30, so it closes into 38.20s, then you can start to look down at 3800, so on and so on. So they're the kind of levels that you need to sort of get your sort of confirmations. So should we move down and test them? So if we get a little bit of a sort of a resolution, they're the kind of levels that I'll be looking at to sort of see how the market reacts from them. But yeah, it's certainly going to be an interesting one, and it's an incredibly tough. Like if you just strip this stuff away and you look at just the price action there, this thing's dropping down, taking out new highs, dropping down, unable to take out the new high here. I think that could be telling, but realistically, it's just consolidating underneath resistance, which is kind of a bit of a bullish breakout thing. But again, we got this sort of Middle East situation, which could really disregard all technicals and blow either way, should it decide to go. Excuse me. So silver outperformed gold coming into the end of the week there. We saw this big sort of sell down similar to what we had in gold. Well, came back, took it out, went up even higher. Seemed to respect this sort of rising resistance quite well, almost to the cent here, as you can see. So interesting for it to sort of come up here. It's quite a strong close. I mean, look, if you put these things on any high time frame, it's still incredibly bullish. You're not going to say that, but this zone that it's in here between say 47.50 and 48.20, this kind of there where it tipped out the top side of it, this is a 50-year zone. We're talking 1980 that price was at this level. I think again 2011, but it has been a zone that which is all-time highs, very much near all-time highs for silver, which it hasn't been through before. So a couple of things with that. Should it decide to keep powering through, you could find a big pool of stops up the top over here. If you get that, we could see this thing just shoot up. It could go 51, 52 bucks very quickly as well. If we hit those sort of stops. We've seen this stuff in the past. We've seen it with gold. I remember at the time when that happened, it was like sort of on a Monday morning, Asia, and it just went bang. And I remember thinking at the time, it went 75 bucks in like 15 minutes. And back then, it was like, whoa, man, 75 bucks. Oh. And I remember spreads were out to spreads were out to like 5 bucks. It was massive and that. And of course, now we do 50, 60 bucks just on a Wednesday and an hour. So yeah, different time with it all. But anyway, that's a risk of the top side there for silver. The fact that it did sort of respect this line here, I think is quite interesting. It's a couple of sort of different pushes up through here now. So it's a 1, 2, 3, kind of 4. Maybe it's just 2, 3 here. But what I'm sort of thinking though, with silver, it's got a very repetitive price action setup, and obviously this thing has just been an absolute rip. But if we go way back down into these zones, I don't know if maybe I cleared the charts from this one here, but there was a period. Where was this? I used to have this stuff drawn up all the time, but it's like I'm like, oh, I'm going to clear it up. It's like a push back in time with silver here. Anyway, look, the point with it, what it does is it finds itself a flat line, whether it's like a support or a resistance. This is an example of it right here, where it finds itself a little flat line resistance over here, or support, whichever way. And you can see the pullback is deeper, comes all the way back up, tests it, pull back, even deeper again, comes back, tests it, pull back, even deeper again. But you can see that sort of like each pullback is going deeper and deeper. But the sort of resistance line is dead flat. The resulting action is when it does pop that, you get a big push through the other side. This is just one example of it all. And I've drawn these things up 1,000 times, but anyway, I'm not going to spend 20 minutes trying to find other examples of it, but it is a repetitive sort of price action that I've seen on silver throughout the time here. Let me get back to where we are. We are all the way up over here. All right, and how this is relevant, if we get back onto the lower time frame, you can see this is very much what we're seeing here. There's a flat line. The pullback is getting, in this case, higher, but it's going deeper than it had in the past, but it's confirming that lower line there. So the way that I sort of see this is you're moving up, come down, well, wherever, come down, higher, higher, and then bang. So for me, the emphasis is very much on this level through here, 45, 45.80, 45.85. Should this roll over? Should we see a break of this level here? Because remember, we've got this little channel. It's not the be-all, end-all channel. And this pullback isn't the definitive number of anything either. But the thing is, this is a bit of a channel here. Continuation of the channel, takes you up around that 50, which is there's an argument for that. Certainly if you break through this sort of rising resistance here, moving up around sort of 50, you could see a bit of a sort of a reason, an argument for that sort of continuation there. But the downside here as well, I think underneath 47.20, which we saw, test and support as a couple of times through Friday's session. Should we get underneath 47, call it 47, 47.05, whatever, it's a couple of points either side of it all. Underneath this level here, you're going to be targeting 45.80, but that's leading up to this sort of price action that we've seen silver do like a number of times. Should you break through there, I imagine quite a quick move down here. And that takes you back sub 44, in my opinion. Like, that seems pretty good. It's around the 61% retracement. We know that this is a sort of support zone that we've seen through here. And look, then that could just open up to a larger consolidation through here. You play it by ear once you get into that point. But it's just something to be aware of in that. So, I mean, obviously it's closed, technically making a whole new high coming into the end of it. Its weekly just looks insane. But these things, don't go on forever. And two, it could still have a pullback here before shooting back up and then taking out those highs and moving up towards 50, 51, 52, 53. Just because it's been going up, doesn't mean we can't have a quick shakeout. And, a change in geopolitical situations could be the catalyst to see some people take some profit. And if you look at this in the scheme of things, like in terms of this last move from its breakout, well, here's your lows down here. So let's just use this one. Drag it up over here. That still only takes you back to the 23, and it's pretty much within a cent or two, or 20 cents, sorry, of the 23% fib from this breakout move. So we're talking about from April lows, which is obviously still very bullish. You come back here, you shake out a couple of the latecomers, and then on with the show and up above 50 or wherever they want to go there. So it's just a possibility. I mean, look, it's very tough to stand in front of these things when they are charging so hard, but it is a possible trade. And for me, they're the sort of levels that I'm using as sort of confirmations. Underneath 47.10 is the first move. That takes you outside this channel. You got your 3 drive. You look for this support, test the support underneath and break underneath 45.80. Look for a move down to 43.80 at that sort of confluence of horizontal supports, and 61% of your latest drive up and 23% of your move since the April lows. To me, that's a fairly decent sort of confluence and potential trade. But, you know, just need to get underneath 47 to open that possibility up. All right, on to Aussie. Excuse me. And for the most part, we saw this actually quite quiet. So we're looking for the inverse head and shoulders coming into Friday session, Thursday session, Friday. As you can see, pretty much hit it pretty much to the point into that zone where we kind of sort of saw it would be. Bounced up, okay, that's fine. Hasn't confirmed yet though. And this is still probably, you know, it's fairly representative of sort of what's happening with the whole sort of US situation at the moment. And this is what I was saying that at the very start of this, that it's the lockdown hasn't sort of really given us anything, or the shutdown hasn't really given us anything in way of clues here, because if we had that jobs number and we knew that jobs were weak, then the emphasis would be on the jobs and the Fed cutting, weaker US dollar. That would give you an Aussie breakout, and your Aussie would be moving up back towards 67. You look for your measured move up to 67, 10 or so. The fact that we got no data, as you can see, for the most part, was really just sideways. Like we bounced down, they went into sort of shutdown or whatever, or shutdown was around this period, and it's really just gone sideways. So again, they're the two levels that I'm still looking at, the same that I said on Friday's analysis, with it all underneath that sort of what is the at this point the right shoulder, underneath 65.74, up above 63.30. They're going to give us our directions with it all. And I think the targets are pretty clear for these two. You're probably going to look for that measure move, which comes up just above that wick from back in September, mid-September, or we're going to come down and sort of be testing 65.20, the 61% plus channel support again, which we've seen a number of times. So again, once you get down to the zone, I imagine this to be fairly strong. Just to sort of see a bit of a balancing of stuff should we get down there. But as I said, underneath 65.75, I think that's the move there. It's not a great deal of data coming out this week. A couple of like sort of inflation expectations and all this kind of stuff, but no real sort of hard data, which is going to sort of push this thing one way or another. So again, I think just the emphasis is really just falling back on this Israel situation amongst a week of sort of weak or slow economic data. Finally, we've got copper. Well, actually, we've still got one yuan to go as well. Copper is actually back on its feet. It's actually moving back up through these zones and that. So, as I said, I haven't traded copper actually. Actually, I haven't traded copper for quite a while because we got that big move up, 17%, yada yada. That comes down 21%. Yeah, I think this has really just scared a lot of people off. And we had a couple of failed breakdown attempts coming along here, but for the most part, grinding up, and we've actually made 50% of that move back now. It is respecting these zones for the most part, as we can see, where we kind of thought this. I put these little zones in here. Well, they originated from back in, all the way back over here, sort of, going back to, well, I guess back to sort of May 24, some of these levels here. And that's where we're at the moment, May 24 levels. But as we can see, it has respected these zones pretty much on the way up, whether it sort of be resistance or coming back to be a little support there. Back up to the 50%. Look, I think a de-escalation could probably be a reason for this thing to even drift a little bit higher. At the moment, I'm still a little bit cautious on it, which isn't super exciting, but there's other opportunities out there at the moment, and I don't think, honestly, these big, fast shakeout moves like this really kind of makes it a little bit of a cautious market still to trade, in my opinion. But, if we sort of take these things out of it, it's pretty much just sideways. if you look at that, that's pretty much, I mean, yes, you got this massive sort of breakout period here for a week or two, breakout attempt in that, where it obviously got smashed down here just prior to April as well. But if you look at this in a broader sense, that's just a big consolidation, a big range. Yeah, we've sort of been out here a couple of times, obviously slapped back down into it, but that is really just a bit of a sort of sideways box that it's in. We had a couple of breakout attempts, didn't last very long here. I think that's probably going to be an interesting level to get above here because obviously we can see that it tested above here. This is obviously March this year and got slammed, what, 20% or something coming back down here, some ridiculously big hit. We had tariff data or tariff news, yada, whatever you want to call it. Moved it out here, stuck out there. Some more tariff news or restriction news, bang, smacked it back down. So I disregard this kind of area here because that's not true price action. That's just, people freaking out over, what could potentially be. Like, I mean, it's all speculation, but that was sort of like, kind of special occasion drama draft. Look, I would say if you can get a close up here, close above 5.2, I think there's no reason you can't sort of head back up towards 5.8, and that's probably the clearest idea I've had on a copper trade for a while. But certainly the recovery's been quite strong. De-escalation I see as a positive. So I think copper could very much be a beneficiary should we see a little bit of de-escalation across a couple of these fronts. Obviously the Russia-Ukraine thing. There's obviously always ticking on in the background, China, Taiwan, that kind of stuff, but I don't think that really matters as much only because it's been there for so long. It's nothing new with it all. But yeah, close above 5.2. I think this might be back on the radar as something that could potentially be a tradable thing. The flip side of that, of course, is that we just reject from here the same that we did back in May 24. And we head back down towards these levels, which I'm actually probably more of the idea that that will happen. But as things are moving up at the moment, you still got to respect that. And so above five, a close above 520, I think there could be something to say that, oh, hold on, wait, this could actually potentially be moving back up towards 5.6, 5.8. Something to think about. Okay, and finally, just with the yuan here. This is never the fastest thing to trade by any means, and it is just a grinder. But this inverse head and shoulders is still technically playing out, but it's certainly taking its sweet time. So we are sort of kind of in a point now coming off. I mean, I cover this all the time. Weekly confluence, negative divergence, yada yada, all this kind of stuff with it all. 715 still remains the breakout neckline. The measure move off that takes you to 720. This is going to come in line with a bit of a US dollar buying spree across the market. It's not just going to be against the Chinese. The flip side of this is that we break down underneath 711. Then your emphasis is back on these lows down to here. If you break underneath 708, it is absolutely cooked because they're weekly support lines, and that just means that you're probably moving down to probably sub 7, I would say, with the yuan, which is very strong. But in comparison, it's actually, in other terms, it's actually just very weak for the US dollar. And as we know, these things have got a pretty sort of strong correlation with the Aussie and gold. So they are probably still going to be the times that we see gold up around 4,000. But as I said, there's a possibility that we do see a little bit of a cooling off in the metals. That would also come in time with a stronger US dollar, which would also come in the same time with a weaker yuan. So we see stronger US dollar across the board, yuan sort of weaken, take it back up to say 720. We've got the break of this sort of resistance that we set up from April this year. Back test to the top side of that. Breakout, back test, higher high. That's your confirmation. It's above 715. Look up to 720. See Aussie cool back down into the 64s. See gold sort of push back down a little bit. Can still come down a little bit. I was actually just on that note of how much gold could come down. I was reading something earlier, and they were sort of saying that if we go off what has happened in most recent times, so again, with the Iran situation, when the Iran, was it a peace deal? I don't know. When the ceasefire, I don't know, whatever it was, when that sort of de-escalated, gold dropped 2% in a couple of hours. So that just gives you a kind of idea of how you could expect gold to react should we see similar events occur with these guys. It's the same region, same part of the world, a de-escalation of them. Gold's a lot higher now than it was even a couple of months ago. 2% of gold at the moment is, getting close to $100. Look, it's not going to really put a dent in the whole thing, but it's something to keep in mind that we could see a short, sharp fast. We dropped $80 just the other day. Yes, it recovered, but these things can happen. And the more sharp sell downs we see in these things, the more it makes you think that eventually one of these sharp sell downs isn't going to get bought back up. Because you got to think, with the price action, buy the dip has been the play for pretty much everything this year. Anytime something's been smashed, people have bought it within a couple of days, they're back up and they're in profit. And it happens again and again and again. It's the same thing that we saw with Bitcoin in 2020. And every guy and his mate and that, they're all traders now. They're all trading Bitcoin. And then it broke. And if we sort of have a look, I mean, look, I don't really cover Bitcoin, but for the point of it, Bitcoin just made a, speaking of which, just made a new all-time high, 125,000. That's US as well. But if we look back at sort of, where was it around, this is 23, that's again, a bit of a history lesson with this stuff. 25, where were they? This year. This was sort of around that period that everyone's trading. And, it just went straight up, straight up, straight up, straight up. And eventually, buy the dip, buy the dip, buy the dip, buy the dip, and then buy the dip didn't work. And then it dropped from, what it hit 60,000, it dropped down to 30,000. So it lost half its value within 1, 2, 3, 4, 5, 6 weeks. 6 weeks, it lost half its value. Now, I'm not saying gold's going to lose half its value in 6 weeks, but the point is that as these things go up, 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 buy the dip, buy the dip, buy the dip, and then buy the dip doesn't work, bang, and it pulls back down. So, these things will sort of cool off eventually, and I think the sort of very much the geopolitical thing, and obviously sort of what happens with the US and the rates and all this kind of stuff is what's going to be the driving force with it. But again, so the same sort of thing with the yuan here, above 715. I think that's going to be something you can use as a bit of a proxy for around the same time that we do see Aussie pullback and gold break a bit higher. All right, that's it from me.